Welcome guys! This is another video from Zendoc Labs. We are a full stack growth consultancy for startups. Today we're going to talk about our full stack go-to-market framework for startups. You may be wondering why this matters for you. Well, it's actually quite important for what you're doing. Because according to CB Insights, which is a huge platform on startup data, more than 35% of startups fail in the go-to-market phase. You have worked way too hard, way too long for your startup to go up in flames in a go-to-market and growth phase. Now we are here to help, and the way we're going to help you is with our full stack go-to-market framework. We built this framework based on years of experience building, investing in, and in consulting for startups. And what we're going to look at are three fundamental things. First, we're going to think about how to define a go-to-market strategy. Second, we're going to look into how you execute a go-to-market strategy. And third, we're going to look at some of the foundational infrastructure that you need in order to be ready for going to market. One thing I want to add, as you're executing the go-to-market strategy, there are four phases that we're going to look at. We're going to look at how you generate demand. We're going to look at how you generate leads. We're going to look at how you convert those leads. And we're going to look at how you can engage and expand on the initial audience that you have won for your product or maybe service. So that's what we're going to cover today. Before we go into the actual video and the framework, let me tell you just a quick few words on myself. As I mentioned at the beginning, I'm the CEO at Zendoc Labs here. We are a full stack growth consultancy. I come from a background as an operator and investor. In the last 10 years, I've built about 7 startups, also by being a principal at Roivant Health, which is an investor operator in healthcare and technology. But before being a principal at that company, I built 2 of my own startups called Eternity and Mesobaum. I've learned a great deal, I've fucked up many things, and I'm here to share my learnings because you don't want to do the mistakes that I've done when you're building your company. So if you like this video, leave a comment below, drop a like, subscribe to our channel. We'd love to hear your feedback and your thoughts about what we're going to tell you about today. Now that's been enough of an introduction. We're going to switch over to the full stack go-to-market framework right now. So let me change my setup here as we're going to look at that. Need to readjust my microphone a little bit. And essentially you're already seeing the go-to-market framework here. A couple of points to highlight. This is for both B2B and B2C startups. We try to make it universal because that's what we're trying to achieve. A single slide that is your go-to resource as you're thinking about your go-to-market strategy. As well, this is from the seller's perspective. It's not from the buyer's perspective. We find that to be a useful way to think about go-to-market because you are the seller. You in the day-to-day need to define what you're going to do next. And it's not easy. If you're thinking about steps like, I'm unaware of a problem and I'm getting aware of the problem and I'm trying to solve it and evaluating alternatives, which are the typical steps that you would see in a buyer-centric framework. You have an idea of what the touch points are that you have with your buyer, but you don't know what you're supposed to do today. And this framework gives you that information. Now, there is a lot of information on this one page that we're looking at right now. Let me break it up for you. And I kind of did that at the introduction already. You have the go-to-market strategy part on the top left, you have the go-to-market execution part on the top right, and below that you have sales and marketing readiness. The go-to-market strategy section is intentionally smaller than the execution section because defining a strategy is great, but you need to go to market, you need to generate data as fast as possible in order to learn, in order to adjust your strategy and hit product market fit. Planning forever is not going to be helpful. You need to have a rough plan, but much more important is executing. So that's what we're trying to signal here. And I've talked enough about this conceptually. Let's actually go into how you do this. Let's start with go-to-market strategy. The way we built the go-to-market strategy is along a couple of questions that you need to answer in order to have a rough guideline and plan for how you're going to go to market. So the first part that you need to define is who you are, what your vision, mission, and strategy is as a company. You need to think about what will you be selling, or ideally, what are you already selling, and how are you kind of thinking about selling? Although that comes later too, that kind of how question. You also want to be thinking about, hey, what may be the problems that I'm solving as a company that are in our space? Now, having a foundational understanding of who you are as a company is essentially a North Star, and that's a really important thing to have when conditions get rougher, be that in the market, in your team, with regard to the product that you're selling, whatever it is. You need to have something to stick to that you really believe into. The second point here is defining what success means for you as a company. You will have a board, you will have a team, they expect certain things from you. You need to know what that looks like when you hit success. You also need to think about, well, how do I measure it? Do I measure it by revenue? Do I measure it by cash burn? Do I measure it by customer lifetime value? Do I measure it based on customer acquisition cost? These are probably all metrics that you want to think about and have a clear understanding of what is that mental dashboard of metrics that you track as you're going to market. And then you need to think about your resources. You need to think about time, you need to think about budget, you need to think about people, at the very least. Because if you don't have the resources to achieve what you're setting out to do, which is what's success for you, you need to think about acquiring the appropriate resources first. Third, you need to think about who may be interested in what you're doing. Let's say you are a B2C app that's in the healthy eating space. Well, healthy eating is mostly relevant for 20 to 35-year-old women. Men also enjoy it, but men are kind of not as much into healthy eating as women are, unfortunately. Maybe you're a B2B tool that has developed a risk analytics application that's primarily relevant for operations people. You need to kind of start thinking about who may be interested in what you're doing, and then take that understanding and segment the breadth of the marketplace that you're looking at by, for instance, industry and other graphics, be that firmographics, demographics, sociographics, or on a need-based way. There are different ways to segment the market. And once you have a clear understanding of here are the different segments in my market, you can think about, well, out of, let's say, the 20, 30, 50 segments that I've identified, which segments are the most attractive for us? And you can think about attractiveness for you, again, based along a couple of criteria. For instance, the level of product market fit that you think you have achieved. Another example could be size of the market, the segment, the growth of the segments, the margins. The margins are actually important, right? If the margins in that segment are tight, you are going to have a hard time selling a new product into that segment unless you have very clear proof points that you improve margins, or at least don't, worsen them. You need to think about location. Sometimes it's easier to be closer to your buyer or your audience. You need to think about competition and other things. We are not prescriptive with regard to the specific criteria that you use in order to assess the attractiveness of the different segments that you could be going after. But I think you want to use data-driven criteria just because it's a more objective measure than subjective measures would be. Once you've done that, you need to think about your ICP. In our consulting work, I have seen very mature companies which drive millions of revenues already not have a clear ICP. And it leads to very specific problems for the company. They, for instance, don't know exactly how much time they should be spending on going after different audiences. If you don't know who you are targeting, who your focus audience is, you are going to dilute your efforts, and that's going to decrease your results. So I'm personally really surprised by how prevalent the problem ICP definition is, even in very mature companies. So you're definitely not alone if you don't have a tight understanding of it. Now, what an ICP typically includes in terms of description is things like demographic data and sociographic data. Like, what do you think? Take a picture of someone, right? What do they look like? What's their name? What's their age? Where do they live? What's their education? What's their salary range? What's the industry that they're working in? What's their job title? Things like that. It also includes information on what you think their needs are as relates to the product that you're selling. So, for instance, one of my previous startups was selling one of the previous startups that we consulted for was selling a product that would help you analyze your investment portfolios and identify overlap between different ETFs in your exchange-traded funds in your portfolio. It's hard to understand what the overlap is, because these ETFs are intransparent, and so the ICP, the target audience that this company was targeting, had the clear need of needing to understand what in their investment portfolios is in order to reduce risk, because they are ETF investors for a purpose. So think about the needs that your specific audience has. It helps you understand what messaging may be looking like. It helps you understand what product market fit may look like. And then thirdly, aside from socio-demographic data and need-based information, you want to start thinking about what some of the channels may be that your ICP is using in order to consume information, in order to educate them, in order to entertain themselves, in order to communicate with friends. All of these behavioral patterns will make it very clear for you where you need to be when you start advertising, generating demand, and converting leads. Last question is the strategy for reaching your ICP. Part of that is obviously going to be defined in a go-to-market execution phase, but ideally you're already starting to think about, well, based on who my ICP is, where do I think I can reach them? What kind of positioning do I want to use relative to competitors? Where are my strengths and weaknesses? And what is the messaging that I want to use? How do I bundle my different products? How do I price my products as I go to market? Now, at this point, you have defined your go-to-market strategy and can now go into go-to-market execution. The go-to-market execution is a much more important phase, although I will say that I think it's critical to have an ICP because it tells you what you need to do and who you're targeting. Not having an ICP is dramatic. Now, as you're looking into execution, there are 4 phases. You want to be thinking about how you generate demand, how you generate leads, how you convert leads, and then how you engage and expand on your initial audience. As we're going to dig into this, think of these 4 phases. Now, let's start with generating demand. There are essentially 2 steps in order to generate demand. You first need to produce content. You need to produce great content, not shit content, not SEO optimized content, truly content that is interesting and valuable for the ICP and the needs that they're having. You can do this in video, the way I'm doing it right now, because I think video is the most engaging format for almost everyone. You can do this in text, helpful because it can be useful for search engine optimization if you add it onto a blog of your website. As one hint here, you can transcribe your videos and have both video and text that you can put onto your website, for instance. You can do it as audio. Audio is insanely popular. Podcasts are going through the roof. Don't underestimate the power of it. Many companies thrive just based on audio content and podcasts specifically. And then also you can think about how you can build helpful tools that are more software engineering heavy. I'm thinking of tools, for instance, that I'm using very frequently, like a search engine optimization checker of a SEMrush or an Ubertrust, for instance. No, I think it's called Ubersuggest. So you first need to produce great content, and then you need to distribute it in order to generate awareness. Producing content is great, but if no one hears about it, it's a waste of time. And the split between these 2 activities should be 20-80, where you spend 20% of your time, resources, people on producing content, and 80% getting really good about distribution. There are different ways to distribute great content. You can think about organic social, be that LinkedIn, Instagram, TikTok, Twitter, Reddit, whatever your product is and wherever you think your ICP is. You can do paid social, which would include LinkedIn ads, Instagram ads, Facebook ads, TikTok ads, Tinder ads, whatever it is. Earned media. Earned media is something you can try proactively, but the media is also going to start coming to you if they see that you have great content, have interesting speaking slots at conferences, at trade shows, for instance. They will start coming to you, but you can also make this a proactive push if maybe some of your team members already have a relationship from some of their previous work with an existing outlet in your space. That's great. Use it. You can think about email nurturing like newsletters. Here I actually find LinkedIn a pretty handy tool in the B2B space. You don't need to have a sophisticated email newsletter. You just invite your connections to follow your company page, and then you post stuff there, and it's as good as a newsletter, if not better, because you see who comments, who likes, who shares, etc. You can have a blog, whether that's your own or ideally a third-party blog. Why am I saying ideally? Because if you have a third-party blog, you can ask to add a backlink to your website. And as far as I have experience in search engine optimization, backlinks are the most powerful driver of domain authority, and domain authority determines whether your stuff gets ranked or not, and highly so. You can think about search optimization, search engine optimization. There is on-page and off-page search optimization that you want to get right. On-page are the simple things, like having tags and titles and enough words on your page. there are just a ton of helpful tools that I mentioned earlier that will help you get your on-page optimization right. Off-page optimization is much, much, much more complicated because you need to be working, for instance, with third-party blogs. You need to think about partnerships where your partners may be linking back to your website. Not that easy to do, but very impactful. Podcasts, I mentioned it. Podcasts are a great way of distributing your audio content. A little harder to monetize. You probably need to have sponsors, but still very valuable for business results, especially if you, in B2B sales, for instance, if you can use your podcast as a way to attract your target audience. So for instance, you reach out to someone on LinkedIn saying, hey, do you want to be joining my podcast as a speaker, instead of sending them a cold email or a cold message in social, which no one reads anyways. You can be at trade shows. And when I say be at trade shows here, I'm thinking about trade shows at this point more about speaking at trade shows. And ideally, you do this in a non-sponsored way where you're getting invited to do so, but that's hard to do unless you already have an existing brand. So even if you do sponsored speaking engagement at trade shows, that's a way to generate demand. Whereas having a booth in an exhibit hall is a way to generate leads, to capture demand, and we're going to talk about that later. Events are a great way, especially if they're like local small events, to connect with your audience and build a loyal followership. YouTube, I think, is more like a storage for video content. Maybe some of your stuff gets seen over time. I think if you want to really grow on YouTube to generate awareness, you probably need to go into, I think they're calling it shorts, essentially the equivalent to Reels on Instagram and Snapchats and wherever you have this ultra short wine-like content. And then PR, another way, PR can get you backlinks. PR is expensive, especially if you work with the established publishing houses. But it can still be helpful for being picked up in random places across the world. If you, let's say you closed a new major partnership or you acquired a startup, you probably want to be using PR, and over time that starts to be helpful too. Ads, display ads, bought probably, for instance, via Google Ads, are a way to distribute for awareness too, and to generate awareness too. I don't think they are a great way for capturing demand or generating leads, which is what we're going to talk about later. That's why they landed under generating demand. I think display ads, in the modern world, especially in B2B buying, maybe not in B2C, I'm not sure how valuable they are. And then offline ads, if you think your ICP is someone, as an example, that likes to travel a lot, why not have an ad, and many startups do this, in the subway or in railway stations or at airports? These can be valuable touch points, but you need to think about the efficiency of these ads. One, it takes a little bit more time to actually print and design these physical materials. Two, you have less flexibility with regard to iterating on a constant basis on your ads. And you're reaching a broader audience. Even if you go into an airport that is predominantly used by people in the finance industry, and that's your buyer, you will still reach 1,000 people that are not in your audience, and then you're wasting, essentially on an per impression basis, you're wasting money. So that was a mouthful on how to generate demand. Let's go over to generate leads. And generating leads is the space where, if you are a new startup or a services-based company, you're probably struggling for survival and you need to start making money ASAP. So generating leads is most likely the place where you will go first until you start hitting a bottleneck where you may find a channel initially where you can generate leads on by capturing demand, for instance, and we're going to talk about that. And over time that's going to run out, and you need to then start thinking about generating demand. So here is between those two, between prioritizing generating leads and generating demand. If you have the resources to both at the same time, if you're a small, scrappy startup, start with generating leads until you realize that the channel that you have been able to attract initial revenue on and generate initial revenue on is running out of steam. Go over to generating demand. Ideally, you kind of you phase in the generating demand activities from day one in a light way. So for instance, for me, in what I'm doing, I found that Upwork is a great way for capturing demand, but it's limited. And so it was pretty clear for me on day one that I need to be thinking about how can I reach my audience elsewhere by generating demand outside of Upwork. And so that's what I did, and that's what I'm doing right now. It takes a little bit more work, And so that's why you typically start with generating leads, because they're closer to making a purchase decision. Now, there are two ways for generating leads: capturing demand and going outbound. Between those two, I would always recommend to start with capturing demand, because going outbound is just a shit show, and we're going to talk about that a little later too. And I'm sorry for everyone who's in sales, who's an SDR. You have a really, really tough job. Now, capturing demand, you can do that in a couple of different ways. First of all, you need to think about whether you have ungated and gated websites, including content, obviously. Now, putting content on a gated website is not necessarily a way for distributing for awareness. For me, that's a way to capture demand that's already coming to your website. It's a big philosophical question whether you would want to ungate or gate your websites. We have both, and it's still kind of nice to get those emails, but it probably reduces your conversion rate on your content by a great deal. But in any ways, what I'm saying here is this is a way of capturing demand. Paid search, obviously, the closer you're going to queries and search terms that indicate purchase intent, you are at a place where there is existing demand that you can capture on Google, Bing, whatever you're using and thinking about. Retargeting ads on, for instance, Google. Someone already came to your website. Why not hit them with display ads in order to bring them back to your page to purchase whatever is in the shopping basket and wasn't executed on, whatever it is. A booth, we were kind of talking about trade shows earlier too. A booth is a good place for a couple of things. One, to get in touch with new customers in B2B selling, potentially also in B2C, but also for moving existing deals in your pipeline forward. In fact, for that, it's probably very important, if not more important than for meeting new people. It's for meeting existing relationships in your pipeline, but also customers that have already closed for customer success purposes. App Store ads are another way of capturing existing demand. Someone is searching for a specific use case on the iOS App Store, on the Android App Store. Why not be there and advertise? G2 is G2, Capterra, tools like that are another great way for B2B tools and maybe selectively B2C applications to show people what they're doing and encourage social reputation and make it easier to convert on their existing interest in something like your product. And Upwork, as one example, be it Upwork, Fiverr, TopTal, Braintrust, there are many different freelancing platforms. Those you can use if you're a services-based business. Now, these are ways for capturing demand. And if you go outbound, that's the second point here. Outbound for me is you have SDRs and a sales team that actively goes out via cold outreach, warm introductions, channel partnerships, builds lead lists and stuff like that in order to bring people into your company. Some of them may have existing interest, and those are most likely the ones that will be responsive, and many others will not, and those will be the ones that are unresponsive. Now, in my experience, response rates to cold outreach are at between 0% and 1%. So you are going to be stuck in a place between deciding, do I go for volume, knowing that you need to hit a certain volume to get you convert people, or do I go for quality, where you spend a ton of time researching a lead, thinking about how you can customize your message and already talk about what problems they may be having, if it's even possible to do that. I found the trade-off very tricky. One is quick, the other one takes a ton of time. The quick one has a lower conversion rate. The one where you customize is probably a bit better on a conversion rate. But ultimately, even there, you don't know whether your conversion rate will be higher. You are assuming it. You have to test for it. Maybe it's going to be as low as going for quantity in cold outreach. And then you're stuck with quantity. And I think quantity just sucks. Like, no one wants to receive another email from a random application or a software development agency for services that they don't need right now, that they could have found on Google in 5 minutes max. So I'm not a huge fan of going outbound, but it's an important part of the strategies for going to market for many different companies, and I recognize that. Now, the third part here is converting leads. There are two ways for converting leads, and the first one is where the sales team in my head actually comes into play, and that's sales-led growth. And the second one is product-led growth. Now, let's break this down. Many products are such that you need a sales team to handhold your buyer in order to convert on whatever it is that you are selling. Now, this is typically the case for instance in enterprise SaaS. That's where I spend a lot of time operating a startup in the enterprise SaaS space, where you can provide pricing on your website, and you should, and you should make it really easy for your buyer to purchase your product without talking to sales. But at some point they will have specific questions. At some point the purchase may be so expensive that they get nervous about buying the product, that you need to have a sales team. And in terms of training your sales team in B2B sales, I think they need to, first of all, I would recommend reading the book, what is the name again? I think it's called Major Account Sales, or Major Account Strategy, which talks about the buyer journey. And the buyer journey in B2B is essentially along, five different steps. The first one is recognition of needs. The second one is evaluation of options. The third one is resolution of concerns. Then you go into negotiation, and then you go into implementation. And your sales team needs to start by getting a really good sense of what the needs are of your buyer in order to be able to sell to them. That's true holistically as a company. You need to have an understanding of what your buyer typically cares about, but it's also on a deal by deal basis, because every deal will be a little bit different. Every company has different needs. And so spending time, be that with a champ that you were able to win internally, or your actual buyer, or reports of your actual buyer in the company, will be critical. In fact, the book that I mentioned and that I'm a huge fan of suggests that you don't talk to your buyer immediately, because you want to educate yourself on what their problems are in order to be a better consultative seller. Another great book in B2B sales, by the way, is Challenger Sale. Definitely read up on that. Once you have developed an understanding of needs, you go into helping your buyer evaluate alternatives, and you need to be honest, right? Sometimes your product is going to be the one thing that solves their needs, and in other cases it's not. And your job is understanding that. Your job is understanding what your buyer needs, understanding how they're going to evaluate alternatives. You can try to influence their decision-making criteria to bring the criteria where you're strong at up in their ladder of decision-making, and then ultimately be honest and really help them make the best decision for their company. Then resolution of concerns is the phase where you need to proactively probe for what may be in the heads of your buyer that keeps them from purchasing. Many times this concerns will show up as pricing negotiations that you don't want to go into before you have actually understood what all their needs are that they're having, what the decision-making criteria that they are using are, and who else has an influence in the decision-making process. You need to resolve those concerns first, and that's the third step, and then you go into the negotiation. The negotiation is essentially about having a pricing discussion, and you want to keep the pricing discussion as far away as possible in complex sales. Now, I mentioned having a price on your website, and that's true, but most likely your buyer will still try to negotiate with you on what your purchase price is. And before you go down that rabbit hole, just make sure that you demonstrated value in the most effective way before you make concessions on price. And when you do make concessions on price and negotiate that, start in a tactical way. Say, let's, for instance, my product is 200 per month. Then buyer says, well, that's too expensive for me. Don't drop to 100 immediately. Drop to 175. Then buyer says still expensive, well then you drop to 160. Buyer says still expensive, well then you drop to 155. Buyer says this is still too expensive, then you drop to 150. You go in incrementally smaller steps in order to demonstrate and suggest to them that you are hitting your ability, you're kind of capping out your ability to give them discounts. And ultimately you have a chance of locking in a higher price like this. And then in the implementation phase matters a great deal in B2B sales. It's insanely complex. Many things go wrong. Probably in every deal, at least something will go horribly wrong. And so this is, once you close the deal, once you're in implementation, you're back at square one. Even you as the account executive that closed this deal, you want to be involved in implementation. Make sure the transition over to customer success and deployment is strong. And over time, also keep probing for what new needs of your buyer are, so that they don't end up going to a competitor who may have done that kind of recognition of needs evaluation and is trying to get them away from your product. Constantly be in that kind of sales mindset where you're evaluating, are we still meeting their needs? What else can we do in order to meet their needs when they're implementing and when they're using your product? Hugely complex discussion. I think I touched on a couple of important points here, but do go into these books, and maybe at some point we do a summary of the key sales books. Let us know if you think that would be valuable. The second part is product-led growth, and product-led growth obviously just works in a couple of instances, examples, verticals, and types of products. Ideally, your product is sort of more a transactional sale, maybe a B2C. Certainly in B2C that's the case, but also in B2B, if I'm thinking about a Zoom, for instance, I would not want to go through a sales process in order to start using Zoom. I would not want to go through a sales process in order to start using Asana for my project management and similar applications like this. That's where you can use product-led growth. And there are a couple of requirements that you just need to have in place in order to win at product-led growth. The first one is that you actually have a good product, right? If your product doesn't sell itself, if it's so complicated that your buyer doesn't understand what you're supposed to do once they're in your demo or once they're in the product, you need to think about having sales teams that demo and explain the value of your product to your audience. If it's a great product, the UX, UI is good, then you're in a good position already. Second, I think it's really critical here to have an easy and free to test application. You need to have a demo that's ideally or maybe not even a demo, the actual product that you can test for free. When I think about that, for instance, HubSpot has a free CRM that lets you use the application where you can get accustomed to the HubSpot way of doing things. You see what all the other features are that they're having on our platform without being able to go into these features unless you pay the price for it. I think that's really important, because ultimately I don't want to be paying for something that I haven't tested unless it's a really well-known brand, unless they have a ton of content on YouTube, have a ton of social reputation that makes me trust that company even without having tested the product. And the third part is I would suggest that you have value-based pricing. I was talking about HubSpot, which has a free-to-use CRM, and then once you want to go into some of the more complex sales features or marketing capabilities, you need to start paying higher prices very quickly, but they're aligned with value that very specific requirements get out of these features. Right, so that's converting leads. You can do it either in a sales-led way or in a product-led way. Maybe you can do both at the same time. I'm sure there are instances where you could do that. And now we're going to go in the fourth and last step of the execution phase, and that's the engage and expand phase. And the first step, the first part in order to engage your existing customers, users, audience, and then expand from there is just make your product better. Listen to what the people that are using your products, be that in your beta or your alpha or your actually launched product, telling to you. Try to understand not just what they're telling you, but what your actual needs are, and improve your product. Second one is customer success. We talked about implementation and sales-led growth. That's really critical. Community management, I found that to be a hugely successful way for re-engaging audiences, preventing churn, which is particularly problematic in B2C, where preventing churn and increasing retention is the name of the game for making your startup successful. Community management, having a chat on WhatsApp, having a chat on Slack, having a chat on Discord, or just generally a Discord community is a great way for keeping your people engaged and having them come back to your product when you have new releases, new content to share, whatever it is. Reminders and notifications are technically also a way for you to engage your audience and reduce retention, reduce churn, increase retention. We probably all suffer from notification fatigue, so I would use this very carefully. And then these are ways in which you can engage your audience and keep them on your platform. Now, how can you expand on your initial audience? You ideally want to get to that magic place where you have viral growth, right? So the first part is that you do cross up and reselling. Reselling should be a pretty intuitive thing. Your sellers should go back to your buyers and try to sell them on the existing product for obvious reasons. But if there is a chance that you can sell your buyer into additional products that you have, or upsell them into more expensive products, that's great. An example here is our car companies. Let's use BMW as one example. BMW has BMW Ones for a reason, where the BMW Ones are a cheap product that they can sell to younger audiences to hook them on their brand, the driving experience of driving a BMW. And then as these audiences age, they see that there are more luxurious BMWs that they can now start to afford, and that's where BMW comes in and upsells them. It's a very intentional strategy, a very smart strategy, That's why I love to drive BMW. It's a great brand. Referral and advocacy, you definitely want to encourage that. So for instance, the way I'm using it in my consulting work is that at the end of a consulting project, I will send you a catalog of different ways in which you can get free work from me, a couple of hours for posting on LinkedIn that you worked with me and enjoyed what you're doing, as one example. It could be that, what I'm a huge fan of, I'm a huge fan of Calendly and what they've done here, and I think that's an old play just from email tools, where whenever you send out an Outlook invite or just a meeting invite via Calendly, the other party immediately sees this was done by Calendly, sign up for Calendly. If you want to have the same capabilities, that's a great way for creating referrals, advocacy, and also candidly just viral loops. And so viral loops are the holy grail where you want to get to. All right. So what we talked about so far is how you define a strategy and how you execute on your go-to-market strategy. Now let's look at some of the sales and marketing readiness. Hold on. Before we do that, let me just mention one more thing that I almost forgot to mention. That's actually really, really important. The way we're thinking about the different tactics, there are just a million tactics that we just bombarded you with, right? The way we're thinking about executing on these different tactics is based on a tool that's called the Bullseye framework, which is taken from a book that's called Traction. That book Traction was written by the founder of DuckDuckGo, which is a privacy-first search engine, and probably one of the only competitors of Google that is to be taken serious. And what he is saying in the Bullseye framework is essentially, here, a bullseye is a circle that has an outer circle, and then more and more inner circles is probably coming from throwing darts. He says, well, here are a million or hundreds of different ideas in which you can market. They're all in your outer circle. Well, based on your ICP, on your ideal customer profile, which tactics do you think are going to be most successful? That's going to be based on your subjective opinion. Then out of these hundreds of ideas, you're going to take 3 to 5 ideas, you're going to promote them to the inner circle, is what he calls. And then in that inner circle, you are running traction tests. And these traction tests are quick tests. They don't take a lot of time. They don't take a lot of money. That give you quickly information on how many of your customers you can get by running a specific tactic or execution, whether that's the right type of audience, and at what cost you would acquire that customer through the tactic that we're talking about here. And then once you've done your 3 to 5 experiments or traction tests, you will start to see the 1 or 2 things that are working. And if nothing is working, you need to promote the next 4 to 5 ideas and do the same process again. But let's assume you find 2 ideas and you see that one is particularly strong. Well, that one thing is the only thing that you focus on until it runs out of steam. Because even getting excellent at one channel, at one execution, at one tactic is so much freaking work that needs a lot of cross-pollination from different types of marketing activities that you need to focus as a startup. Let's say, for instance, you're on B2B and you're recognizing that LinkedIn is a great place to generate demand with valuable content. Well, then focus on LinkedIn. Focusing on LinkedIn, however, on LinkedIn Organic, however, means that you need to start commenting both as a person, as the company. You need to have your personal profile. You need to have your company profile. You need to generate text, video, content. You need to snip that up. You need to edit it. You need to publish it on the platform. You need to engage with the comments that you're getting. You need to connect with new people. You need to invite them to follow your page. Not millions of things, but tens of things that you need to get really good at. And then once you have exhausted the potential that you think you have on a platform like LinkedIn, which should be pretty big, or once you have acquired enough resources to plug in another execution, you start doing that too. But you don't do too many things at the same time in the beginning, because you do see that getting good at one thing even takes a lot of time and effort and different type of cross-pollination activities. That's a Bullseye framework. That's how we're thinking about prioritizing and finding the things that work across generating demand, generating leads, converting leads, and engaging and expanding. Take an experimentation-based mindset here and focus. All right, sales and marketing readiness. Now, there are a ton of things that you could be doing in order to get ready for going to market. We've tried to prioritize these. This is just a suggested prioritization. You will come up with your own prioritization. You definitely don't have to follow this. I think what matters more than what we're saying here is just prioritizing, because again, focus. There are so many things that will distract you as a startup, and that's going to be killing you. So priority number 1 are things like having a website, You could use a tool like Webflow. Webflow is more complicated than a tool like Squarespace. Our website, for instance, the V1 was completely built by me in Squarespace. It took about a week, including the design. It was almost for free, a really quick thing, and I had that piece of infrastructure in place, which I deemed critical for taking a consulting firm to market. Socials, both for your company and personal, is pretty straightforward on different platforms. It depends on whether you're B2C, B2B, and what kind of ICP you're targeting. Analytics are critical. I think you need to have that in place in any case. Google Analytics, be that for your application or your website, you want to have it. You also want to have the Google Search Console. You may use the Google Tag Manager in order to define custom tags for Google Analytics, where you can track whether someone clicks a button rather than just tracking something like page views and time spent on page, which are nice to have metrics, but not as valuable as knowing how many times a specific button in your application or your website was clicked. You will need to have creatives. Initially, you could maybe consider creating them yourself. Ultimately, you may hire a designer to build, ad creatives. For instance, if you want to do paid social, you need to have lead lists. If you want to go outbound, you can generate lead lists via Apollo, LinkedIn Sales Navigator, ZoomInfo. ZoomInfo is much more expensive than Apollo. I have found Apollo to be totally satisfying for my purposes. You likely need to, if you're in B2B, especially if you're in an enterprise sales, you definitely have to have a CRM. There is just no excuses here. And HubSpot I found to be a valuable tool because it's free to use. But you could also be using Zendesk. Probably don't start with Salesforce, but maybe ultimately you do that. There are a ton of different CRMs. Give HubSpot a shot. And by the way, just to be clear, we're not affiliated with any of the tools that we're talking about here. These are just where we have personal experience using them. Email collection in a tool like Sendinblue, I find that helpful. Even if you decide not to do email marketing and nurture campaigns right away, what it helps you with is just starting to collect every single email that you get. Put it in there, especially if you're in B2B, so that if you ever decide to start a newsletter, or if you're ever looking for that one email that you kind of lost somewhere, you have a tool to go back to and reference. Priority number 2, spin questions. Spin questions is taken from the book that I think is called Major Account Sales Strategy, which developed where I took that buyer journey framework from, which is recognition of needs, evaluation of options, resolution of concerns, etc. Essentially, what spin questions are questions that look into the situation, the problem of your buyer, and help you get ready before a call to think about what you should be asking. Now, the book, and I agree with it, essentially says that you want to spend your time on problem questions, not on situation questions. The situation question, when you talk to your buyer and decision maker, you should understand by talking to other people in the organization, like your champion and influencers, and by doing desk research. What you want to do when you talk to your buyers, ask insightful problem questions, because it helps you demonstrate your consulting capabilities, and modern sellers are consultants. You're challengers. So you want to have spin questions. You want to have a question tracker. Very helpful to have a question tracker when you interact with your buyers that you then can use in order to communicate with your product and customer success teams. I found product teams to be very appreciative of question trackers because it indicates pockets of needs that they can then focus on in their product development. A sales deck is a pretty intuitive one. We still don't have a sales deck today, and we have sold tens of thousands of revenue. Very, very unnecessary in the beginning. Ultimately, as you get more and more professional, as some people may be demanding it, you can consider building a sales deck. But usually I would always recommend take your sales discussion off a piece of paper, listen to your audience, have a verbal pitch, have your website, have them convinced by your social activity, by your social reputation, and then you don't need a sales deck. Community management, we talked about that in Engage and Expand, really critical. One-pagers, I probably would maybe even switch out sales deck and one-pagers. One-pagers are a handy tool when you send out cold emails, for instance, in order to give someone a quick piece of information to stick to and not to feel entirely lost when they talk to you. I found those more helpful than sales decks. Having a content engine is really critical, and it's kind of a priority 1, but it doesn't fit into priority 1 because it takes so much resources to build a properly functioning content engine across written, video, and audio. Initially, it's going to be the founder of the company that's just writing a blog post or that's recording a video like I'm doing it here. You don't need to have a professional execution behind it. then you can put that into priority 1. But if you go into a more well-established content engine, then it's priority 2 because it takes so many resources and time. Ungated and gated content, is step number 2 after having a website, but it's also pretty important, especially if you push advertising money into your page or if you try to generate demand actively. Priority number 3, I found tools for feedback pretty cool. Again, especially in B2C, but I think it's also relevant in B2B. Productivic, for instance, lets your users vote on features that they want to see developed in the future. I found that to be a great source of information when I was building applications for my own startups. Trustpilot is also a great way of just building social reputation, and sooner or later you're going to have reviews on a tool like Trustpilot, and whether or not you like it, you will be judged, and so you may as well take a lead on building your Trustpilot profile. Google My Business is similar. Maybe there is even a link between whether you have a Google My Business presence and your domain authority. I think it's just good practice to do everything that Google offers you to do in order to just demonstrate to them that you are a real business and take it seriously what they're offering to you with their search engine. Off-page search optimization is a very powerful tool for generating demand, backlinks especially, but it's hard to do. And even if you try to prioritize, it takes time. Because you need to develop partnerships, you need to develop friends. And so I would almost prioritize in such a way where you say this happens over time as you build your company. You can try to push it actively, but it's not that easy. Social media queuing, a tool like Buffer is helpful. The way I'm doing it is just setting an hour every day aside to comment on stuff on LinkedIn and to post stuff. But if you're really, really active on social, you may want, and if it's a really critical channel for you, you may want to think about it in a more tactical way where you have a tool where you can pre-plan and pre-write all of your posts and that they then go out at a specific schedule. Sequences in a tool like Apollo are insanely helpful for achieving quantity and going outbound. Essentially, for instance, what you can do with Apollo, they have like a LinkedIn plugin where you can go into someone's profile and you can add them to a sequence from within LinkedIn, and then Apollo will send them automatically the initial email. They will send them follow-ups, and so you don't have to take care of all of this, and it takes a lot of work to send up follow-ups. And even just adding in names, for instance, you can fully automate this entire process. Very helpful. And then lead enrichment with tools like Line. The concept is great. If you can hit a high quantity of people with customized messaging based on a lead enrichment tool like Line that gives you specific talking points that are relevant to your audience, this sounds like a great way for doing cold campaigns. Now, I haven't seen these tools work specifically well. They will use, almost kind of unengaging content like, hey, saw you live in city XYZ. Hey, saw you studied at university ABC. It is nice, but it's not talking about specific problems. So you need to think about whether that's really engaging for your audience. Nonetheless, give it a shot. The potential is huge. So we went through our entire go-to-market framework here. I promised you that this would be comprehensive, synthesized, and full stack. So this is everything you need to take your startup to market. It will still take time. It will still be hard up. But don't forget, at least 35% of startups fail because they can't go to market successfully. It's the number one reason why startups go up in flames, and you don't want that to happen to your company and your team, right? Well, then apply what you learned here. Let us know what you thought. Drop a like, drop comments below, and reach out to us if you think you want to explore an area specifically in more detail. We're happy to talk to you about that. My name is Raphael. I'm the CEO at Zendoc Labs. Wish you much success building your startup. Keep hustling, keep going, never give up. Have a great day.